Whatever stage you're at with your trading, it's important to stop and gain perspective before planning your next move. Take a break from the charts and join in the discussion with our hosts, Jason Graystone and Akil Stokes, as they share insights, opinions and expertise on all things trading. Grab a coffee, pull up a chair and join the Trader Coffee Break.
Whoa. Welcome to the Trader Coffee Break. Let me just get my mic out a little bit there. How's everyone doing? Hope you're doing well. Hope you've had a nice week so far. This is the Trader Coffee Break, and it's looking a little different today because this is normally where myself and my trading buddy Akil come in, grab a coffee, meet around the water cooler and rant about trading. But today we haven't got Akil. And we've just got me. And the reason being is because Akil, unfortunately, is suffering from a sore throat. So I hope you get better, Akil, soon. Hope you get well soon. But the show must go on, so we're going to continue forward. If you're here, let me know. If this is the first time you're watching, let me know. We did hit 1,000 subscribers, over 1,000 subscribers on this channel now, so that's great. We did say that if we hit 1,000 subscribers, we'll do a special Q&A to the trading community, so that's what we will do. And today we're going to be talking about the importance of understanding the basics when it comes to not just Forex trading, but trading in general, because we've encountered quite a few issues over the years where a trader has kind of skipped ahead, rushed ahead, and then they find themselves in a situation where they need to figure out some basics, in order to make money, to actually place trades, to calculate position sizes. And whilst their head was just placing trades left, right, and center, rushing to get in to actually place a trade, they didn't learn how to place a trade. They didn't understand, order placement, order flow, brokers, pips, position sizing, money management, risk management. They didn't know any of that stuff. So when they go into the platform to really start placing their live trading, even if they've learnt professionally and they're ready to go, they've back tested the system, even if they did all that, they then feel like this is embarrassing because I don't know some of the things that I should know to place a trade, and I can't ask anyone now because I've been telling everyone I'm ready and I've done all this testing, and then they just fall off. And that's quite common as well. I've sort of had many emails from people saying, I'm a bit embarrassed to ask about this because I should have known this. And then they just slip by the wayside. So we're going to be talking about the importance of understanding the basics and what to focus on. And at the end, in a little while, I'm going to give you the best way that you could possibly go and figure out all those basic things, what you need to know when you're getting into trading. If you're brand new to trading, these are the things you're going to want to understand. So I'm going to reel them off, and you guys can fire in the comments what ones you think are important as well. But the first one that I want to kind of make clear is you need to understand the Forex market. And I don't mean like you need to understand every exchange rate and country economies and all the rest of it. I'm talking about, you have to understand what Forex actually is, right? I'm the amount of times I get asked if I can exchange or change up holiday money. and people ask me, I'm going out to Spain in the summer, should I get my euros now or wait? And I'm like, man, it's irrelevant. And a lot of people don't understand it. So understand what the Forex market actually is. Understand the scale of it, the size of it, how it compares to the stock market and other markets, how it can, how you can leverage the Forex market, when you can trade it, okay, when it's available, when it's open, what drives it. So just understand what it actually is. You'll be blown away by how many people don't understand what it is, and they come from an options background or a futures background, or we've had a lot of people come in from a poker background, and they don't understand Forex. They just say, oh, well, I can deal with this because, you know, it's something that I can do, and then they figure out actually it's not it's not quite what they thought, right? I'm just looking at some charts here, by the way, as well, because there's a really nice level. I took a trade on the Aussie CAD earlier, and I put this out into the group as well, but there's also a really nice level on the pound Aussie, which is a nice structure-based level that I'm looking for price action pattern. I'm looking for deceleration on this. And this will come into some of the basics that I go through in just a moment. Hello, Bobby. How you doing? Cade, how you doing? The next one is you have to understand what a strategy is, a trading strategy, because a lot of people think that it's just, well, you buy here, sell here, put your stop loss there, when actually the strategy is how you approach it, what time frame you approach it on, what markets you approach it on, what style of trade, you know, what bias you have and how to build that bias into your trading decision, how you execute the trade, how you manage the orders, how you manage the stop loss, how you, you know, all of that stuff. That is all part of the strategy. Your emergency rules, your habits, your rituals, your, you know, your setup rules. All of that is a trading strategy that you can then apply to the markets and come out with a profit. The next, probably arguably one of the most important things to understand is brokers. A lot of people don't understand brokerages and how brokers work and the order flow and the A book and B book and what the intention of a broker is. A lot of people just give brokers a bad name because they feel like, oh, well, they've got no, you know, they haven't got my interest at heart. They just want to make money. They just want me to trade. They don't care if I win or lose. No, they don't. But think about it this way, that most of them make money when you're trading. They take a small piece off of every trade that you take. So think about that. They want you to keep trading. They don't want you to blow your account so that you walk off and never trade again, because then they stop earning money. They're not taking your money when you lose the trade, right? It's going to another player in the market. They're just taking a small cut. So they want you to keep playing and playing and playing. And a lot of people blame their broker, and that just shows a very a lack of understanding for brokerages overall. The next thing you want to understand is about your trading account. Okay, opening your account, understanding, and this is a big one, understanding what instruments are allocated to your account, what you can trade legally in your country, what you have access to, what instruments you have access to in your trading account. Because a lot of people try to go and trade crypto and they can't trade crypto, or they try and trade stocks and they can't trade stocks. You need to understand your account. You know, you need to open a demo, get to learn the account and get to learn the platform and play around with it, look at your instruments and look at your, you know, your control center, get familiar with it and really don't rush, play around with it and figure it out, learn it. The next one is technical analysis, which is why I've got some charts up here, because a lot of people who get into trading think, well, it looks easy. You just look at some patterns, or you look at something that looks like it's going up and you you buy, or you sell when it's at the top, or you buy when it's at the bottom, and all this kind of stuff. In actual fact, technical analysis is quite a large part of the skill that you develop as a technical trader. And it's a lot more involved than you think. You know, I always talk about the 6 main components of successful technical analysis that's going to give you an edge, which is the market condition, the market phase, the indicators, support and resistance, the price action patterns and the candlestick patterns. But it's how to put all that together. So those of you who saw the video that I put out earlier on the Aussie CAD, this was a trade that I put out. It played out beautifully. Now, it might not hit targets and we might get stopped out or what have you, but played out beautifully. And the reason I'm able to predict those patterns, those moves, like on the decimal point, very, very sharply and very accurately. And the way that I'm looking at the pound Aussie and looking at this zone here that I drew out, we were trading down here this morning, right? Now we're pushing up into that zone. The reason I'm able to identify these zones right now, and look, we're putting in bearish pressure right now. is because of the skill of overlapping and overlaying all of those components of technical analysis so that I can pinpoint the highest probability zone for a reaction in the market. And that's it. And that takes patience. It takes waiting for a setup, waiting and waiting and waiting. Patience pays the bills. But if you don't understand technical analysis, you're going to be buying and selling all over the place, because in reality, you can talk yourself into a setup long and short whenever, right? 100 times a day, 1,000 times a day, right? Anyway, so there's that, right? The next one is just as important, if not one of the most important, and that's managing risk. So why you're putting a stop loss, where you're putting a stop loss. Calculating your position size so that you're not overexposed and your account isn't at risk in any one trade. Also, diversification risk. If you're in multiple trades, how do you manage that risk? How do you not lose money? That's the most important thing in trading. How do you not lose money? And managing risk, you have to be a master risk manager when you become a trader. Okay, and a lot of that is also what's neglected there is the fact that hey Chris, that people put a lot of effort into figuring out, where's the high probability move so I can get in like this, right? But they don't put that same effort and emphasis on target taking orders and stop loss orders, when in reality they're all the same thing. They're all orders. Okay, so you don't just put your stop loss at a level that you just off the hip. It should be as much attention and effort and detail goes into selecting the optimum stop loss positioning with the most resistance, and a target at a level that's not being greedy, but at another level where there's likely to be a reaction, but with the least resistance. So you have to understand how to manage that risk and how to put yourself into high probability setups time and time again. The next one, how to place orders. This is a big one, right? Placing orders. This is all basic stuff, okay? This is all the fundamentals that you need to know as a minimum. Placing orders. A lot of people have come to me and said, I don't know why my order hasn't closed, and I went asleep and I woke up and I was in a position the other way and I was losing money. And what that comes down to is not understanding order placement. Buy stop order, sell stop order, limit orders, buy limit, sell limit, at market. One cancels other orders, stop and reverse orders, right? Bid and ask, how that works and where you're actually getting in. What the instruction of an order is to your broker, and understanding that you're in a queue. It's not a guarantee that you're going to get filled at that line on your chart. It's just an instruction to your broker that that's where you would like to place an order, right? And a lot of people don't understand that. You have to understand that, otherwise your results will be skewed to your expectations for sure. All right. The next one is you need to understand how to monitor your trades healthily. Okay, so depending on your time frame, whether it's the daily or the 4 hour or the hourly, you need to be able to monitor your trades consistently, but in a way that's healthy to your trading as well, so that you're not revenge trading, over trading, force trading, under trading, all that bad stuff. And usually what that comes down to is understanding price action and technical analysis, so that you can say, like for instance, on this Aussie CAD trade, here, this here was a bullish flag. And we said, what's likely to happen here is we're likely to rally up pretty soon. So if we were watching this zone up here for an entry, we can say, well, if there's a bullish flag there that's likely to rally up soon, we could put this at the watch list and keep a closer eye on it than one that's maybe ages away from completion because it's at a major level of resistance or something like that. Make sense? And being able to kind of prioritize how often you check each of the setups, because you don't have to check every single chart every single minute or every single time you check your charts. You don't want to be doing that, because that's when you fall into the trap of you're not going to have to go out for lunch. Your head's going to be off of the game. You're going to be kind of constantly thinking about your charts. You'll be taking your laptop with you, and that's not really why you got into trading, is it? Probably not. And we're getting on a bit now, so I'm going to give you guys one more. And if you've got any, make sure you fire them in. If you've learned yourself the hard way, and you think, wow, I wish I knew this earlier, put that in the comments. They're the sort of things that we're talking about in this episode of the Trader Coffee Break. The last one for me is taking profits and cutting losses, okay? You have to understand the importance of letting your winners run and not taking profits early, and cutting your losses as soon as you know that you're wrong. As soon as you've said to yourself, this is the level that I'll accept I'm wrong and I'll get out as quickly as possible, you want to be sticking to that. Because a lot of people take, this is what they do. Let's just say we're going to get in here, right? And this is going to be our target, and this is going to be our stop loss, right? And let's just say, for instance, that we entered this now. So let's just give you guys an example, right? So we're going to go in here. This is a demo account for you guys. And we're going to go, do you know what? I'm going to place a trade. We're going to create a new order, and we're going to sell at market. Boom, we're in, right? And we're in on the pound Aussie, and we're selling. People don't get their stop loss in, or they do get their stop loss in, so they'll do this, and they'll go, okay, we'll get our stop loss in at 75.52, so 75.52, and let me know if this is familiar. 75.52, okay, and we'll take our profit target down here at 73.32. Okay, so 73.32. Okay, and this is what they do. Now, what happens is price action starts pushing into their stop loss. Okay, starts pushing towards their stop loss, and what they do is price action pushes up, and they go, "I'll give it a bit more room." And it's got to turn around in a minute, right? And then I'll give it a little bit more room. It's got to turn around in a minute, and I'll give it a little bit more room. Okay. And that's what they do. And they do it over and over and over and over again. And guess what? You take a big loss. And then guess what they do on the next trade when it's going in their favor? The price action rolls over, it starts going in their favor. And guess what they do? They take the profit quick to make back at least some of what they lost. Who's done that, by the way? Let me know in the comments. All right? When you have a reward profile of 100 pips and a risk profile of 300 pips, it won't take long to blow your account doing that. 3, 4, 5 trades, that's it, you're done. Okay? So don't be doing that. You put the effort into identifying zones for all orders that are all high probability, breathing room for your stop loss, resistance from your order to your stop loss, no resistance from your order to your profit target, and then high probability moves, technical analysis nailed, okay, good reward to risk profile, place the trades, cut the losses early, let the winners run. Do not take your orders off early. As soon as you do that, you're back to square one. You're back to square one. I don't know what you guys think. Let me know in the comments if I've missed any that you think are important. Those are the, probably 10 tips did I give you there? 10 things to think about, definitely important, and I highly recommend that if you're thinking about learning to trade, those are the things you definitely need to focus on first. And if you go to Jason Graystone YouTube channel, the last video that was posted on there is a brand new 2.5-hour training on trading for beginners. And I've had so many traders write to me and say, look, I've been trading for a little while now, and this was amazing because it really reinforced the basics that I needed. You know, I missed this or I missed that, and you've really cleared that up for me. It's a step-by-step guide, straight off the street, brand new to trading. You're thinking about getting into it. You don't know where to start. Go and watch that video. It's called Trading for Dummies or Trading for Beginners. Go and give it a watch and let me know what you think in the comments of that video. And that's about it. So if you guys have got any questions, let me know in the comments. We'll be back again next week with Akil, hopefully. And thanks for tuning in. Share this channel with anyone who's thinking about learning to trade or any of your trading community guys. And until next week, remember, less is more. Do less to achieve more. And I'll see you next week.
Thanks for joining us for the Trader Coffee Break. Be sure to like this video, subscribe to the channel if you haven't already, and don't forget to hit the notification bell to never miss a live discussion. Follow our hosts on social media. And remember, do nothing to gain perspective on everything. See you next week.